Good evening everyone and welcome to another weekly breakdown. I just want to say firstly, I hope everybody has had an amazing trading week and we caught some of the moves that did happen, especially on GBP/USD and EUR/USD. Just want to say a quick reminder that we are doing courses on www.traderbook.co.uk. There are limited spaces and spaces are running out really quickly. So if I were you guys, I would head down really quickly and fill your spaces before they are gone. So as you can see on the screen, my analysis looks a bit different than it normally does. Normally I just, I don't really show the full analysis. I normally just tell you guys what's going to happen, but this is something that I wanted to show you guys, and just to make you more aware of, this is something that is covered in the course, and this is the amount of detail that is put into the analysis and into the work of catching the most accurate trades with minimum risk and honestly high reward. So I'm just going to break it down for you guys. Now, I always start on a monthly time frame because large institutions, investment banks, hedge funds, they're all going to trade on larger time frames. They're not going to trade on 15-minute, 5-minute charts. They're going to trade on daily, weekly, or monthly because their capital, well, they work in the millions and billions, right? So they can allow a bit more of leniency in terms of how much drawdown they can have, and they like to trade from these charts. Now, what we can do is we can actually use this for our advantage and understand where the institutions are trading on a higher time frame and for a longer time frame. Now, we can see we have here is the monthly IC. Now, a lot of this stuff has been abbreviated as it is the free content, but honestly, if you guys do go to traderbook.co.uk and buy the courses, then everything will be explained in detail, all the abbreviations and everything will be explained to make sense of what I'm about to, go on. But we all know IC is institutional candle. There's a few here like RBBR, which I've actually abbreviated, because this is just a free content. So here we have the monthly bullish institutional candle, and we can see that a lot of these relatively equal highs are being targeted, and we can see, overall we have been bullish. Well, when I say bullish, I'm talking from 2008. So I'm just here, this is what I do to understand what institutions have been doing for the last decade. This isn't something you have to look at every day when you trade, but I like to do this just to understand how they work and what goes through their mind when they're moving the markets like this. So we've got a whole void over here, right? Between this void there's a lot of micro gaps. So this is a long-term goal of dollar coming down to 80, but we'll worry about that when we get there. Right now I look at the monthly and I understand what has been going on for a long time. Then if we drop down to a weekly, we understand a lot about how these trend lines have been blown out, equal highs have been made, and it sweeps the trend lines to take out retail traders, and it shoots up again to our weekly and monthly bearish RB, again is abbreviated, and how we have just come down all the way since then. And you can see lows been taken out, comes up, you got 50% of weekly bearish BR. And once you understand this kind of style of trading on a larger time frame, it makes it much easier to make lower time frame trades on 15-minute, 1 hour, because you understand what they are doing on a higher time frame. Now here we can see I wrote this last weekend. I did write DXY was in consolidation, and if we do break the 90.440 mark, then I do anticipate price reaching for the monthly bearish institutional candle and having a huge sell-off. However, if we trade lower at market open on Sunday evening, then I expect price to continue to reach for lower prices below 89.00. So as you guys can see, I'm going to go to the daily chart now, and you can see that we did trade above 90.440, which is just around here, and we closed above it. So I am bullish on dollar for now until we do get up into this area with this daily bearish BR is. So I am looking to get into this area, and I do feel like, you know, we are gonna poke into maybe 91.5 before we do get a sell-off. I do have a strong bias on that, and then we could see price progressing to the downside. So this is just something of DXY that I thought I'd just share with you guys. And I did say last week, if we do break this, we will be bullish, and we have been. It's just been consolidating, and it is January, and January is normally a dry month as well. So we should see more liquidity and more price action in February, and we should see a lot more pace in the market. So for now, I am bullish until we get to about 91.4, 91.5 on dollar, and then I do expect a sell-off. Now, going into Euro USD, another pair, starting from a monthly time frame again, you can see what institutions have been doing for a very long time. This is from 2001, and you guys are probably thinking that is crazy, but it's just to understand what have they been doing all this time, because most of the things they do are repeated, right? And it's just about finding out how they work and what they do. So you got the monthly analysis over here, then you got the weekly. Got the weekly analysis, and it helps you understand, even when coronavirus happened, how they shot price down and why they shot price to this point. Why not further? You understand, because it was an institutional candle, they shot it down all the way, and we've been in a bullish trend ever since, and it makes you understand more about the market. Now looking at the daily, we can understand, you know, they've been taking out a lot of highs, you know, they took out this low, swept the LQ, and they injected more liquidity in the market. Then this is where you can jump to the 4 hour, and you can start basing your trades on the 4 hour, and you know, you can base it off a lot more. So a trade that was taken by me this week, I did clear up a lot of my trades and stuff just so I could make this much easier for you guys to see as well. But you can see here we had this institutional candle which I did place a buy, and my take profit was here 123 pips, but as you can see we never got there. It's about 10 pips shy, right? So I saw price consolidating, and I decided to collapse my trade at around 100 pips. So, you know, what we need to understand is, it sounds fancy saying 100 pips, you know, like catching 100 pips every day is what most people would want to do, but we need to be content with just making maybe 100 a week. But we do aim for a lot more, but in certain market conditions, it's okay to just have 100, because let's say, for example, you used a 0.01 lot on this trade. So let's say you use a 0.01 lot and you got 100 pips, right? That's £10. If you use 0.10, that's £100. If you use the one lot, that's £1,000. So you can see how 100 pips is very, very, you know, beneficial, and it is quite a lot, but we need to have the risk factor in mind. We need to focus on our risk more than we focus on the profits, because if we have a lot of risk and expose our trading accounts to a lot of risk and drawdown, then, you know, it really does mess with our psychology side of trading. And obviously jumping down to our 1 hour, we did have, you know, it's basically consolidating, if you will, but it is moving quite rapid as well, but it is, I would say, consolidating. So hopefully next week we do get much more movement. I do feel like we could see a lot of downwards momentum for Euro USD, because, you know, I am still bullish on the dollar just up to here, so we could have a spike down on Euro USD before heading up again. Hope you guys found this insightful. If you did, then as I mentioned at the start of the video, do head over to www.traderbook.co.uk. Spaces are going really fast, so if this chart work, if my analysis does give you more clarity towards the trades, then do head over and get your spaces quickly. Other than that, I hope you guys have an amazing weekend and an amazing trading week coming forward.